Governor, how confident are you and how certain, how sure are you that this will not likely depress the economy and Nigeria's GDP? Thank you.
So now, how are we sure that the decision will rein in inflation? I've already said it. We believe that it will. And what we have done at this meeting is to say we'll move CRR up by 5% to a minimum of 32.5%. That will move MPR up by 150 basis points. That means over the last 4 months, we moved MPR up by about 400 basis points. But at the same time, let's not forget that inflation rate in Nigeria at 20.5 is still higher than our policy rate. So which means we are still lagging. We are still in the realm of negative interest rate, which remains injurious to the economy. Now, what message do I have for the banks? We have increased the CRR, and we expect that this decision at this meeting must be seen to be potent and must achieve the effect that the MPC thinks it should achieve. What is the message? We expect that all the banks in Nigeria must fund their account by Thursday, 48 hours, because we will debit them for CRR. We will take their CRR to a minimum of 32.5%. So which means we are going to take liquidity out of their vaults by Thursday. If any bank fails to meet up with this expectation, the decision of the MPC is that we may need to, let me use may, we may need to preclude those banks from foreign exchange market on Friday and onwards until they meet this 32.5. This message is meant to underscore the fact that MPC says this very aggressive decision to rein in inflation must yield result. We do not want to face Nigerians in the next few months and we begin to take the blame for not being able to rein in inflation in spite of all the rates that we have raised. So we have decided to adopt a two-pronged approach. Increase MPR, so policy rates, so we want to see interest rate go up, and 2, CRR going up because we must mop liquidity effectively out of the vaults of the banks.